Hello and welcome to the Citadel Traders Group. We're here today to answer the one question that I get answered the most, and that is, how do I get started trading? So I'm putting together a video series on teaching you the steps to get into the stock market. Now, maybe the average trader sees something on TV, reads the newspaper, Investor Business Daily, or the Wall Street Journal, or maybe they're a tech guy and just like the iPhone and want to buy an Apple. Whatever their reason, their whim, they're buying a stock, they take money, throw at it, and pray that it goes up. Praying is not an investment strategy. It's not a way to be successful in the stock market. You have the potential to lose all your money, just like in this cartoon. So what we want to do is put you through basic training through a series of videos to help you learn how to be a trader. First, you have to educate yourself. What type of investment vehicle am I going to use to make money in the stock market? You got to choose one based upon your personality, risk tolerance, comfort level. Then you have to develop a trading plan. A trading plan is a disciplined set of criteria that says when ABC happens, I execute a trade and get in, and when XYZ happens, I execute a trade and get out. So you have to have rules. Again, no fly-by-whim trading. You have to be disciplined. Then you're going to choose a broker based upon your investment vehicle. For our stocks, there's E-Trade, Ameritrade, Scottrade. Options, there's Thinkorswim, Option Express, TradeKing. Futures, there's Global Futures, Proactive Futures, Interactive Broker for all of them. You're going to choose a broker based upon your investment vehicle. Then you remember when you went to school, when there were school supplies? Same thing for a trader. There's things that you need to be able to stay consistent and stay up to date on what's going on in the market. We'll talk about more of that again as the videos continue. Practice, practice, practice. You know, right now there's the NBA preseason. In July and August, there's the football preseason. And in March, there's the baseball preseason. And that's because professionals know that you have to get that muscle memory, that mental memory going so that when it happens live, it's not an internal battle. It is just happens natural. It is a flow. So you got to practice. Many say up to 6 months before putting in real money and implementing your trading plan with real money. We're going to talk about that. We're going to have a chat room available for you, and we can trade together. And then we want to make adjustments according to current market conditions. The market's going down, you should not be buying and selling high. You should be doing something else. So we're going to talk about that and look at 3 specific investment vehicles: stocks, options, and futures. Forex is a great option. I'm not an expert there, so I'm only going to talk about these 3. I think most people understand stocks. Again, you do your research, however you want to do it, and then you want to filter those thousands of stocks. We'll talk more about filtering when we get to our supplies. But however you come up with your reason to buy low and sell high, that's the basic understanding of stocks. Now, you can sell high and buy low, not worrying too much about the uptick rule. But that, I think everybody has a basic understanding of stocks. There's fundamental analysis where you look at the balance sheet of a stock, and there's technical analysis where you're looking at price patterns, price behavior, and investing based upon that. Now, options is a little bit different. So what leverage does options give us that stocks do not? Well, again, in our traditional stock example, we buy stock at $50. We have $1,000. We get 20 shares. The next day it goes up $1. Woohoo! We've made $20. Options gives us a way to invest in that same stock ABC, but at a lower price point. You're going to, instead of buying stock ABC, you're going to buy the option, which is that KL there, and you're going to buy it at a contract. Now, 100 shares are in a contract. And so we're going to take that $1,000, we get 200 options, and hope that our delta is at a 99. I'll be honest with you, you're probably not going to get a delta 99. We like to stick around 70. The higher the delta, the more that option contract costs, the lower the less it costs. But in our example, stock goes up $1 because we have a delta 99. That is the ratio of how much the stock goes up, our option goes up that same amount. And so now our option that we bought at $5 is now $5.99. Well, that is a 20% return on investment. Woohoo! So in this example, we want you to see that options allow us to use the same amount of money but get a higher return on investment. That is leverage. Now, sure, that is also leverage to lose more, but with a disciplined trader, knowing when to get in and get out, options gives you the ability to get into stocks. Apple right now is $200. You can buy the option for $5. Google is $500. You can buy the option for $20. So it gives you into stocks, but at a lower price point, higher return on investment. You do the same process for getting into options as you do stocks, but now you have to understand Greeks. That delta word, theta, time value, intrinsic value, option, are you going to buy in the money or out of money, and then they expire. Now that's what they scare people. Ooh, options expire, worthless. But professional traders know that if you're doing spreads, iron condors, bull put spreads, bear call spreads, we actually do want them to expire worthless. So let's continue on with our leverage and talk about the leverage of futures. You can get an intraday account with allowing you to buy at $300 to $500. So with that same $1,000, you can buy anywhere between 2 to 4, 2 to 3 contracts. Now with the Dow, that's $5 per point. Now that's an advantage over the options, because of that delta and a little manipulation, the stock can go up and your option may not go up according to that delta. But in the futures, the future goes up a point, you make $5. It goes down a point, there is a tick for tick ratio. The S&P is $12.50 per point, but that's broken down into 4 ticks, quarter increments, and the NASDAQ is $20 per point. And so if the NASDAQ goes up 1 point, you make $5. In our example, you're buying $3, so you make $15. However, really $1 for a stock is close to, say, 50 points. So now 50 points, that's $250. At 3 contracts, that's $750. Again, you see that leverage. Most important thing is you don't have that same amount of research, because we're only focusing on 3, really only 1. And you don't have to know anything about this Greeks, option chains, and theta and time value. You really just have to worry about this particular contract you're looking at, Dow or the S&P, which is what most people do. So let's review. We're going to take you through the process of becoming an effective trader through this video series. We just took some time to educate you on a different investment vehicle. The next video, and you can already get that we're going to talk about the specific investment vehicle you could choose, and you can probably guess that we're going to be talking about futures. We're going to talk about how to develop a trading plan, choose a broker, what type of supplies you need to be a trader, where you can practice and get a demo account to practice futures, trading plan, routines, a trading room for you to be at, and how to make adjustments according to the current market conditions. So this is the first part of our series. We wanted to give you a heads up on a couple of things. Yes, we're going to focus on futures. If you go to this link, it will take you to where I think is the best future trader broker. And one of the advantages is you get 20 free contracts if you register with this broker and register with the Daniel. 20 free contracts. We're going to talk about supplies, but here's where we recommend to get some good supplies for your charting for trading. And this live professional trading advice, this is not my room, but this is the room that I'm in. And I tell you, click on this link, and it will take you to their track record. And their track record is great, especially for small account people, $1,000 to $2,000, $3,000. But even our big account people will see the advantage of this room. So guys, I'll see you at the next video.